Okay, everybody, it's me, Gregory Mannarino. It is still Monday, June 27, 2022. Did I get that right? Yeah, I'm having a problem these days. All right, look, people, post-market wrap-up. Let's talk. I don't even know where to start. How about the stock market, just so I can get my head on straight. So losses today, nothing major across the three major indices here. Crude oil surging higher by 2%. WTI about $110 a barrel. It's going to shoot much higher. I'm telling you, this drop we've had recently has just been some kind of freak event. They're not going to allow it to happen. You understand that. Crude oil being the lifeblood of the military-industrial complex, the lifeblood of the market. Energy depends on it, obviously. The entire sector, the financial sector, the banks, leveraged to their eyeballs here are the investment banks in crude oil. They finance the whole damn thing. Let us move forward here. 10-year yield 3.2. Okay, 3.2. Nothing major going on here if it stays at this point. I want to read something to you in just a little bit, but let me finish here. We got gold and silver today finishing mixed. Gold falling under some pressure, not much. Silver slightly higher. Bitcoin back under 21,000. That's the story with the market today. Questions about this Russian default. Do I even believe it happened? How about more than likely no? Okay, everything is propaganda, and Russia can clearly pay this bill, and there are a lot of facets to this. But it seems like a lot of you are asking me, do I believe that Russia defaulted? Well, there's my take on it, and I'm telling you, it's a non-event anyway. Stop focusing on things that other people are telling you to look at because it's a black swan. It's going to be a black swan event. No, it's not going to be a black swan. Nothing. Okay, forget about it, please. Okay, let me calm down. Let's move on to the economic front just real quick, because this is the game that they play. If you were to turn on Bloomberg, Fox Business, CNBC, they're like orgasmic over, pending home sales. They just unexpectedly rose last month. Oh, it's a miracle. But what they won't tell you is year over year, pending home sales are down like 14%. You're not allowed to know that. Again, focus on this. Don't look at the bigger picture. You're just not allowed to do that. And then they throw this on you. This is crazy. I know durable goods orders apparently coming in better than expected. That's very interesting. How is that when we found out that, of course, factory activity, manufacturing here in the United States is cratering? It's over, okay? But no. You see, not only are we in a war with Russia or whatever else here, and we are, make no mistake about it. It's a propaganda war as well, and nothing makes sense. It's all lies and distractions and bullshit, cat shit and dog shit. So anyway, that's the story. It's laughable. Oh yeah, oh absolutely. You got to be so happy about pending home sales. They're higher. Oh, how about year over year down? Tell me again. What is that number? 14%. How about that? Frankly, sucks. But you're not allowed to know that. Now look, people. I want to put a little light on to something of what's actually going on. Understanding the nature of the beast, that is the debt-based economic model that we have. The fact that, and I want you to think about what I'm about to tell you. The world today is awash. It's saturated in debt. It was debt saturation, okay? I think we all know that. How about if I were to tell you a little secret that you're not supposed to know? You ready to hear that little secret? You might want to sit down. Although we are awash in debt, and every day global debt keeps expanding, there's not enough. Yeah, let that sink in. There's not enough. The nature of the beast, the debt-based economic model, you know this, okay, is that every day, relentlessly, reasons must be created out of thin air to allow the system to function. That means to create reasons to borrow more from the future in greater and greater amounts. We can't stop. But no politician is going to tell you this president, the last freak president, and all these other freaks. They can't tell you that. They can't tell you that the system must relentlessly be fueled and continue to be fueled, because without that mechanism, we run into something you have heard me mention, a liquidity crisis, a freezing up of the entire system. Now, what do we know is going on? What just happened? What profound event just happened? We had a sell-off in the debt markets, which caused global bond yields to rise. It was getting airplay everywhere. If you notice, you hear nothing about it anymore. Why? ECB, Federal Reserve, jump in here with emergency monetary policies to stabilize the debt market, period. Now, as most of you know, at least I hope you do, I write articles for the Transit Journal. I do this for free. I receive zero compensation. Believe me, the trolls out here, oh, Greg's writing articles for the Transit Journal because he's getting paid XYZ. Really? I dare you to ask Gerald Celente himself if he pays me one single dime. I do it for nothing because I believe in Gerald Celente. I believe in the Transit Journal. And that's the truth. So I don't want to hear from you retarded trolls out here. Oh, Greg's doing it because he wants to make money. It's not true. I don't get paid a single dime. Now, with that said, I want to read this to you. This is a little preview of an article that I just wrote for the Transit Journal, and it will be out on Tuesday. So you can understand what I'm talking about, what the action of central banks is actually doing right now, what's going on behind it, and what lies under that even deeper. What are they actually trying to pull off? So I think this article is really important. It's kind of short, but I want you to hear this, okay? Title: Central Banks Are Rigging the Debt Market Like Never Before, by yours truly, traderschoice.net, link below. Anyway, since my last article published here in the Transit Journal, we witnessed an unprecedented sell-off in the debt market. This happened right after I wrote, actually just before I wrote my article in the Transit Journal, which led to an uncontrolled spike in the 10-year yield. And this spiking in the 10-year yield caused a steep drop in stock prices. I think we all witnessed that. These events, with one triggering the other, obviously, debt market sell-off, spike, pressure on stocks, just as you knew it would play out, because I've been telling you that scenario since time immemorial. This event has caused both the European Central Bank and the Federal Reserve to now engage in yet more debt market manipulation, a move to an emergency policy stance. Okay. Immediately following the rapid and uncontrolled sell-off in the debt market, both here in the United States and in Europe, the European Central Bank instituted an emergency monetary policy to prevent a fragmentation of the debt market. This action by the European Central Bank sparked the Federal Reserve to also act. The Federal Reserve is calling their action unconventional means to prevent a disruption in the debt market. What is this telling us before I even move on? This is rigging in the debt market again, people, to the highest order. They're in here buying the debt. What does that sound like? Hold that thought. As a result of this unprecedented action by both central banks, yields across Europe and the United States have dropped, and more specifically, the benchmark 10-year yield, where was I, has normalized. Lovely. This normalization of the 10-year yield has caused some cash to make its way back into risk assets or the stock market. And world equity markets are seeing some inflows here. The only question is, how long will this last? Okay, hold that thought. Couple of things that are important here. Number one, the fact of the matter is this, and you know this already, the current actions now being taken by the European Central Bank and the Federal Reserve are massively inflationary, and they know it. Okay, with central banks now again buying debt, they must again create epic sums of cash out of thin air, just magically, so they can get in here and buy that debt. What is happening here is yet again another round of quantitative easing on freaking steroids. Now, both the European Central Bank and the Federal Reserve are rigging the debt market, keeping rates suppressed, all in an effort which seems to be working so far largely to push cash back into the stock market, okay, and inflate equity prices. But it's bigger than that. Pay attention to what I'm about to say. Now, in my opinion, what these central banks have done and are doing, okay, I'm starting to get wild here, is just putting a Band-Aid on a monumental problem, simply pushing off an inevitable and eventual total meltdown in the debt market, okay? I think it's just going to get much worse. They're adding fuel to the fire. Today, this is common knowledge, okay? The global debt continues to surge higher and it cannot ever stop. It is the way in which the system is designed to work. It's a debt-based system. Moreover, despite this, like I said at the beginning, there is not enough debt to allow the system to function. There is not enough debt to allow the system to function. Without continually and exponentially expanding on the debt globally, the system immediately becomes, here's the word, illiquid. Okay. Once the system becomes illiquid, all transactions stop. Could you imagine if a retarded president who has no idea about any of this, or a politician or somebody would come out and explain this to people? No one will do it, okay? They'll just call the stock market a big fat ugly bubble during their campaign and then proceed to inflate the stock market bubble to heights that no one's ever seen before. I'm referring to President Trump, okay? And then this current idiot, which is, I have no words for, but no one, believe me, none of these creatures here are on your side. If you think they are, you have no clue about what's really going on. Now, what central banks are desperate to try and avoid for now, are you ready, is an illiquid system. Every manner and method available to them will be utilized to keep this system able to find reasons to borrow more cash and create more cash and add it to the system to keep it liquid, okay? Wars, expansion of wars, various disease processes, and any other crisis is going to be used to keep the machine liquid. Look how I ended that. So be ready for anything. You got it? This is really, really important, honestly. And anyway, look, I believe in the Trends Journal. I'm going to give them another plug here. If you do not subscribe to the Trends Journal, you're missing out on a lot. Gerald practically gives this thing away. With his expenses that it cost him to put this out with editors and everything else, the man doesn't make any money on it. It's just a matter of him doing this because he's passionate, okay? So please subscribe to the Trends Journal and you're going to be really on top of all this. Gerald did not ask me to come out here and do this. I'm doing this today because I believe in it. And I believe in all of you. It's really the truth. We got to expand our knowledge, what we know. And if that means we got to follow people like Chuck, my buddy, one of my best buddies out here, is now trying to enlighten people as how the system works. People like Jack Gamble, I'll give him a shout out too. All right, Jack, that was a slip, but you're a good guy, great guy. Nobody special finance. I think you are very special, sir. I like your work. I really do. As a matter of fact, I think, at least I believe, he interviewed Chuck today. I don't know when that's coming out. All right, people, look, I don't want this video to run too much longer, but ponder the things I have spoken about here, okay? Every method available and things you can't dream about is going to be utilized right now to expand global debt, to keep the system liquid. Because once it becomes illiquid, this whole thing stops. It's just over. You understand? It's just freaking over. And I want you to understand that. All right, with that said, I'm going to let you go. Love you a lot. Important video. I hope you think so. Please share this video. Comment here. I want to hear from you as always. More and more of you are commenting, and I love reading the comments. I really do. And I'll see you in the morning, all right? Let's make this a great night. I'm out of here.